to today's webinar, the subject matter of which is probate, which is a word that no doubt some of us are a little bit scared or intimidated by. Thankfully today I'm joined by three experts in their field who are going to give us a priceless view on their side of the process and actions they may take. We must say thank you ever so much to Mackrell Solicitors for hosting today's webinar. Now, let's start first of all with just a brief introduction to the people that are actually involved on today's panel. So first of all, down at the bottom we have Natalie Payne, who is a private client solicitor for Mackrell Solicitors based in their London office. Natalie handles a wide range of multi-jurisdictional work, including wills, estate, administration, powers of attorney, trusts, and inheritance tax mitigation. Natalie is an honorary legal advisor to the Citizen Advice Bureau and an affiliate member of STEP. Philip Arnold is also with us, who is Managing Director of Philip Arnold Auctions. They hold 7 public auctions per year, offering the sale of residential properties, commercial lots and land, predominantly in and around London, but also around the entire of the UK. Philip is a fellow and past president of the National Association of Valuers and Auctioneers, a fellow of the National Association of Estate Agents, and a chartered surveyor and member of the RICS. Lastly, but by no means least, of course, we have Rachel Doerr, who is the Managing Director of Doerr Dallas Valuations. Rachel has worked in the art and antiques industry for the last 25 years, and over the past 10 years has been responsible for looking after both clients and professional advisors with their valuation needs. Now, thank you ever so much for joining us today, ladies and gentlemen. Now, I think the best way to approach this is what I'm going to do is offer our 3 panelists a scenario and then quiz them on their part in the process. So the actual scenario that we have here. George Smith is a widower and he dies aged 89, leaving 1 son. George's will leaves the majority of his estate to a son with a number of items bequeathed to distant family members. George's assets total a large 3-bedroomed house in London. The property is in need of attention as George has lived in the property for 40 years. George's son lives in Manchester, and we understand George and his wife were keen collectors of art and antiques. George leaves a bank balance of £500,000 and various investments in stocks and shares. Now, first of all, I'm going to come to Natalie and say, Natalie, you're usually the first person in the address book for people to contact. So what's the first thing you should do when somebody dies?
So the initial stages are that the family normally do the first part. So when someone's passed away, one of the key things actually to do is to double check that the home insurance is updated, because it can be a reason, if you don't notify them, that the person's died for them to actually not to pay out if something was to happen. And then it's important to try to find the will to see if there's any funeral arrangements in it or if there's a funeral plan. And also to have a quick look for just important documents that you're going to need to register the death, which could be the passport, driving licence, marriage certificates. And they're the key things when someone passes away that is important to try to do immediately.
Excellent. And those things, I'm assuming, it would be after contacting yourself, or you would get into that position once you found those documents?
Some people will call me straight away and we'll obviously go through that with them, but as a family member you can do that immediately, because you can hopefully access their home, or they might have put or told you that they've put a box of all important documents in the cupboard or the loft or the usual places. But people can get on with it straight away. They don't need to notify us straight away.
So usually, Natalie, as soon as people have found those documents, they're usually not just looking for those things, but looking at things for importance or value around the property. Now, how do you actually go about valuing those assets?
So after they've obviously arranged the funeral, the next thing is to turn to the finances. So they need to either look in the home, which can be quite difficult, but you do need to go through all their personal belongings and start creating a pile of everything. Also, again, they might have put documents in a box, or they might have created a document on their computer and given you a copy of listing everything. So the key things to look for, obviously, title deeds, bank statements, share certificates, any loan documents, tenancy agreements, also their VC5, because you'll need that in order to sell a car. So just literally everything to do with financial matters. And then once you've found all of that, or most of it, because you can use third-party organisations to help look for assets, but obviously make sure they're credited. But then after you've found everything, including debts, because you've got, obviously, there could be a mortgage to pay, so you should always notify the mortgage company. You then need to start contacting everyone to find out what is the asset value or what's the debt. And then once you've started to accumulate that, then the other things that you're not going to find paperwork for, of course, the house and the personal effects, because they're key, especially, and Rachel will address you further on this, but with the personal effects, if anything is very valuable, and this is why you must notify the insurers, because they will notify you at that time whether you need to remove items or whether the insurance policy can continue to cover items in the house or for how long. And that's why that's very key. So once you've got all the paperwork, that's when you start valuing.
Okay. Before we come to Rachel, I think we'll just briefly touch on, well, not too briefly, but speak to Philip here about the valuation of a property, because generally speaking, it is the main kind of source of asset within kind of the probate scenario. So Phil, why would you recommend using an RICS registered valuer rather than an agent?
Well, I've come across many scenarios of this where the client has got, say, 3 estate agents' valuations, which invariably are different. They take a mean average of them. In particular, HMRC will look at them. The district valuer is more likely to challenge that sort of valuation, because it's, if you like, more of an opinion, if you like. Whereas what we call a red book valuation, so I'm a RICS registered valuer, generally the district valuer will look at those. They know it's coming from somebody experienced. In my case, you can probably tell by the grey hairs, 40 years worth of experience. But they will, they will generally take that on board as a professional valuation, and one which they're quite happy to adhere to, which then leads on to obviously the tax element that will be calculated upon. The other important thing to note is that the valuations we do are done as of the date of death. So, interestingly enough, I actually have just finished one this morning where the guy died a year ago. The family have since refurbished the house, but my valuation had to be on the scenario of the condition it was in as of the date of death. So they're the sort of things that we would take into account, but invariably HMRC would look for a qualified valuation. I would say all the time. So hence that's where us guys come in.
Fantastic, Phil. Thanks for that. Now, Rachel, leading to you, is it a similar scenario then with chattels and items within the property, and why is a probate valuation by an independent valuer so important?
Yeah, again, it goes back to what Phil said. HMRC do look more favourably when it's been done by a professional valuer. And again, it depends what's in the property. From your scenario, we're very interested to know that the client's obviously collected, because often if there isn't any family to talk to get some background on the contents, we would look at things like an insurance valuation to see if there's anything that's actually listed actually on that policy. But often that can be misleading as well, because when you're doing a valuation for probate purposes, the values are very different. So again, that's something that you need to bear in mind. And exactly what Phil said, we're doing it as of the date of death as well. So the sooner that you can actually get into a home, or even we do a lot of tax planning valuations prior to death, which are often easier when clients are looking at sort of getting their affairs in order, because family can, they can write all over it who they want to leave to whom. If there are items being bequeathed, then who are they being bequeathed to? But we don't just do valuations for probate when we're being called in by lawyers. We can also do them for the family independently. And the reason I say that is family division can often split families apart when they're arguing who gets what or that's worth more. So often we'll be called in again at that point where families don't necessarily understand the value and they want somebody just to confirm it is right, so they're not throwing away something or putting something in the skip that is actually of value.
Rachel, you mentioned the different types of valuation and the fact that the figures are very different in a lot of these. So how do you actually go about putting a valuation together for probate?
I think it's based on the fact that it's a wet weekend in Williston, and it is what could you actually get for that item on that Wednesday at that time, rather than it actually being based on more of a marketing exercise and what the piece is. So it's a totally different value, and it's a lot less. You know, I've always said to clients, think of it like a carpet. If you go out to buy a new carpet from John Lewis, and then the next day the person dies and you roll it up and put it outside the front door, you're not going to get what you paid for it yesterday. So it is two very different values, and you don't want to confuse an insurance value as a probate value. The idea, and Natalie, you'll confirm this, really as an executor, you want to be paying as least tax as possible, but it being a fair and right value rather than a retail replacement value.
Yep, brilliant. Now, Natalie, I'm going to come back to you on this. So how do you actually go about the process of applying for probate?
So once you've got, and I always call it the snapshot of the date of death, because everything is what happened on that day. So once you have all the valuations and you know all the debts, now obviously understandably, don't panic if you think, do I definitely know everything, and wait for that, because HMRC are very happy for corrective accounts to be filed. So we do obviously reassure people of that, and that shouldn't be a reason to hold back applying for probate. But so long as you've got pretty much 99%, you can apply. Now, as to how you apply for probate, it will depend on the asset value. So in relation to George's estate, if his total asset value is above the inheritance tax thresholds that are available for his estate, then he will need to complete a form that has to be sent direct to HMRC, which is known as the Inheritance Tax Account 400, or the IHT 400 for short. So when you do file you file the inheritance tax account, you do need to then, once you've got the asset values, and you'll see on the document you have to submit to HMRC, that you do have to allocate the relevant inheritance tax exemption. So for instance, he could have assets that are inheritance tax exempt, but in this case it appears that he would be claiming potentially his late spouse's nil rate band allowance if she didn't use it when she died. So potentially, although he has an inheritance tax allowance of $325,000, he potentially can use, so his son can claim his wife's inheritance tax allowance as well. And provided his estate qualifies for it, so that it's below 2 million, then potentially he could claim the main residence relief allowance, which is an additional allowance, but there are caveats on this. You do need to make sure that your estate qualifies for it, but it could be potentially he gets an additional £175,000 to use against the property he owns, and also can claim his late wife's allowance as well if she didn't use that in her will. So once you've got all that information, you can start completing all the forms. And then the other form that you do need to complete is the oath as well. But you send the inheritance tax form to HMRC, who then check all of this. And this is why it's so important to have proper valuations done, as Phil said, for the property, and as Rachel said, for personal effects, because HMRC do have their own department that check values for everything. Obviously the banks, they can check themselves, because there's not really it is what it is for a bank account, and also for shares. But for chattels and properties, HMRC really will look at that, and they are very unlikely to challenge a proper valuation. So it's worth every penny to have things properly valued, because no one wants an inquiry from HMRC. So once all that's done, you can submit everything. HMRC, depending if there's inheritance tax to pay, you have to pay all the inheritance tax that's due on liquid assets, so things that are movable, bank accounts, shares in this case, and also the personal effects. But the inheritance tax that's due on the property, you only have to pay 10% on submission of the inheritance tax return, and you can pay the remainder over 10 years unless the property is sold, and then it's all due. So do make sure you're paying the correct amount. If you don't, HMRC will contact you and tell you that you need to pay extra, and they will not allow you to move on to the next stage, which is contacting the probate registry to actually get the formal grant until all their tax is paid. And you need to be aware that inheritance tax is due ideally within 6 months of death, because if it's not, HMRC will charge interest on unpaid inheritance tax. But inheritance tax can be withdrawn from bank accounts. The bank will allow you to withdraw sum of money and pay it direct to HMRC before you get probate, because usually asset providers such as a bank will not allow you to apply for probate if the value is over a certain amount. So it won't release any money if the value is over a certain amount and they require probate to do so.
Natalie, this seems to roll off your tongue because obviously you deal with this on a regular basis. But for the average person that hasn't dealt with this kind of scenario before, why should they use a solicitor, and why should they come to somebody like you to deal with it on their behalf?
A lot of the time it's emotional support. You're going through a lot when you've lost someone, and you often can get yourself in a little bit of a muddle because there's a lot to cope with, even just doing the funeral. So normally I'm brought in to help people, especially immediately, to get all the paperwork done, because it can be incredibly daunting if someone has a lot of assets and trying to collate all that paperwork, not knowing what you're doing. You get yourself in a muddle, and then you could potentially make an incorrect disclosure to HMRC. Sometimes people don't realise the allowances that are available. They don't understand that lifetime gifts have been made. They don't understand that certain assets actually don't have to pay inheritance tax on, such as pensions and certain life policies. So often we can come in and actually, for a lot of people, they realise if they'd done it themselves, they potentially would have paid more tax. And obviously HMRC would hopefully pick this up and give them a rebate, but they could miss it. Again, it's only humans checking the inheritance tax returns. But also you've put yourself out of pocket of money and then have got to reclaim it back from HMRC. And also it's to try and to put you in touch with the correct people to value assets. You get honest valuations, because as Rachel highlighted, a lot of estates are contested. Contentious probate is constantly on the rise. We get at least about 5 inquiries a week on contentious probate matters. So that's why it's so important to get everything properly valued, because you know where you are, you know what you're telling the beneficiaries, and also you know when you put something on the market, you're actually getting the right price, rather than you making an assumption that something's not worth something. And I, hand on heart, remember being in someone's house and the valuer pointing out it was actually a clown ornament. Now I thought it was horrific, like absolutely horrific. And I just thought, God, that's probably worth like, I don't know, 100 quid. And it was actually worth £10,000. Whereas they had a beautiful handwritten Bible, which I thought was absolutely stunning, the workmanship on it.
Wasn't worth it.
Not worth a lot at all. So I went purely on taste, my own personal preference for things, and it was so wrong. So that's why often we make assumptions and they're incorrect, and that's why it's so important to use a solicitor, because they'll be honest with you and they'll put you in touch with the right qualified people that will look after you and your family.
Coming back to prices on things, I'm going to just come to Phil on this, because obviously, I mean, when you actually come to the disposal of a property, now, where would you kind of recommend for the eventual disposal? Would it be private treaty? Would it be auction? Where are the bonuses of working with the two different sides of things?
Yeah, I mean, to be honest, on any report, probate valuation, I would always put a marketing recommendation. Now, obviously, from my point of view, I'm an auctioneer. I'd like, love the property to come into auction, but that's not always the case. We will always give an honest opinion that we'll look at the client's circumstances. So, for argument's sake, in George's case, the son might think, you know what, I really need to sell this as quickly as possible. Maybe he's got other debts or whatever, who knows. Bearing in mind George's property is dated, that's a good type of property for auction. You get the right type of buyers, they can add value to it, maybe convert it into flats.
You're looking at people that are trying to add value to a property, or one that might be in a semi-derelict state along those kind of
absolutely. Those type of properties, without a shadow of a doubt, sell very well at auction. And sometimes people get very excited. You actually even get more than they're probably worth. But, you know, we'll look at each property on merit. It may well be that in a lot of cases, as we do, we say to the client, look, you're not in a hurry to sell it. It's a house in very, very good order. You know, giving it to the local agent is the best advice, you know, so it will vary on a case-by-case basis. But invariably, the probate properties that we get for auction do create a vast bidding war, and sometimes, you know, even I'm astounded standing on the rostrum, you know, with the bidding going on. It's
I've seen it with my own eyes. It is remarkable once these things get motoring. Now, obviously, we've spoken about the fact that some of these properties are worthwhile going into auction because of their state of repair, shall we say. Now, people will ask the question, if they come to a property that is this dated, should they put the work in and then put it on the market, or should they just let the market decide and then let the investor put the money into getting it up to speed?
I mean, I'm a believer in, you know, let the market decide, and auction's a very good way of doing that because it's a transparent method. You can see the guy next to you bidding on it. It's a very open forum. Everybody gets the same opportunity to bid. And, you know, in addition, you know, the executors can look at it and they know that they've achieved the best price they could, you know, on the basis that everyone's had a fair chance to bid on it in an open forum. So, you know, that's a wonderful benefit of auction. The other side is, you know, the hammer comes down, that's it, the sale is done. Contracts are exchanged on the fall of the gavel. There's no phoning up the following day saying, oh, I've changed my mind, or, you know, can I have a price reduction? It's set in stone. Whereas obviously
it's the quicker way of dealing with things.
It's definitely a quicker way. Whereas on the open market, you might find a buyer 3 months down the line, they change their mind. You're back to square one. You find another buyer. Same thing happens 3 months down the line. And before you know it, sometimes, you know, you could have been trying to sell the thing for a year. And I'm not saying that happens in all cases.
No, but I think we've all been on one side of the other with that kind of market, you know, with housing and things like that at some stage, and I think it does happen.
No, absolutely. And as Natalie was saying, I mean, you know, there's good. Most cases there'll be a tax bill to pay, and a lot of the beneficiaries can generally only pay the tax bill by selling the property. Now, whilst it probably will go past the 6 months by the time you've got probate and you've got it sold, interest is being charged as you go on the lot. So invariably, that's another reason why auction is a good method of disposal, because you can move on, you can pay your tax bill, and you know, so
go from there.
Yeah.
Now, obviously, in terms of auction for property, we're hearing the benefits there. Now, but with Rachel, the benefits of using an independent value rather than an auction house. So let's just talk about that, and what's your view on it?
An auction house will only ever tell you what they want you to hear, and often it may not be the best place to sell, or there may be an alternative auction house that actually is more well known in that area. They have better buyers. So it may be, from our point of view, we would advise to split the estate up into different sections. We would help manage that sale. So it may be that we put some with one auction house and some with another. You've also got to make it attractive when you're selling it at auction. So you don't want to strip everything out so that you're only giving, you know, the lesser goods to an auction house. You've still got to give them an appetite. And then you'd negotiate on fees. So often when there's somebody like ourselves doing it, we're totally independent, so we can advise the client the best way. And it may be even that you look at a private sale route, depending on what the item is. And I suppose, again, we would look at, going back to Natalie's point of view of how quickly they need funds. You can look at different ways that maybe some auction houses would sell quicker, or they may even give an advance on the sale. And private clients necessarily aren't aware of that. So we're acting in their best interest in realising the best price. and that's what you're looking to do for a client with auction. So it's the best place, really.
So as an independent advisor, you can advise the client on basically the route through all of it, from going in and valuing it, from actually to right through to the stage of receiving the check at the end of the process.
Correct, and we can also help with if they're looking to clear the property and there's you know, items that need to unfortunately go to landfill or charity. We can also help with that. But again, by going in, we often find things that maybe the family aren't aware of. Recently, we were in one client's home where there had been a previous valuation done. It wasn't necessarily for probate purposes, but items had been misattributed to who they should have been, who actually were worth more. And they'd totally missed things like Rolex watches, because necessarily the question hadn't been asked. But it's also, you know, unfortunately, we do have the job of going through clients' items. And it's with, you know, total respect that we're doing that. And I know that Phil's probably in a similar situation when he's often first probably back into the property after a death, Phil, I would imagine.
Absolutely, yeah.
So and again, if there's items that have been bequeathed, we can remove them there and then, and we can arrange with Natalie, a solicitor, who they should go to, or we can arrange for items to be held with an auction house until probate is being granted. Sometimes they will allow the sale and sometimes they won't. But again, we can make sure that they're removed from the property, because obviously we want to make sure that there's no risk element.
I think what we're all coming to the same kind of viewpoint on is obviously that there has to be a degree of empathy with the clients that are actually going through such a difficult circumstance. And I mean, I don't know whether you'd say this, Phil, you know, looking at somebody's sale of, you know, potentially what could have been their childhood home, it is something you really have to pay a lot of attention to.
Oh yes, definitely. And I'd even go back to what Natalie said at the start. It's you know, it's not just the job you're doing. You know, you are holding hands with these for people. You're trying to help them through a very, very difficult time. And yeah, you know, dealing with their, as you say, their childhood home. You know, there's a lot of memories there for them. You know, the whole family history's been there. It's a very, very difficult time, and you know, I've been through it personally myself. It's not easy, and you know, to have like-minded people who can help you through that, give you the confidence to deal with what is an awful time. You know, I think that's very, very important. You know, so it's not just a case of a cutthroat sale. You know, we want your house to sell. It's not that at all.
I think that's the key of finding the right person to actually sell an item. And I think we go back to what Rachel was saying about finding the right auction house or finding the right method for the sale of those items. Would you agree,
Yeah.
Rachel?
People are vulnerable. People are really vulnerable at this time. And going back to my comment about families, you know, they're not necessarily always on the best terms, and death of a family member can really change how people react, because they, you know, there is a financial gain often. And just because people are brothers, it doesn't really matter. You know, I've seen behind the scenes the wives that are saying, but your mum promised you that. Or, you know, she always said our daughter could have the large single stone diamond ring. And that's why I always say to clients, do it before you die. Right, get a valuation done. Right. Yeah.
It leads us on to a question actually that I was going to ask Natalie next. With what happens if there isn't a will?
So if there's not a will, then it all will depend on who has survived the person who's died. It's all based on the intestacy rules. So very often, people who you think are going to inherit do not. And people who do die without wills, it does tend to, especially because of personal effects, sometimes cause quite difficult, contentious probates. So it's always very important to understand that if you don't have a will, exactly who is getting your estate, because it might not be who you want. And just because you're married, does not mean you get the whole estate. If you have children, depending on the value of your estate, your children will also receive something, and that can cause inheritance tax issues, and also if they're minor children, them holding assets when actually the surviving parent potentially needs to sell them and things and they can't. So it is really important. It doesn't change, it makes the procedure a little bit more complicated because you've really got to know who the beneficiaries are, and especially when, you know, in this case, fortunately George has a son, so it's quite easy to identify the beneficiaries. But, you know, people can come out of the woodwork, additional children and so on, which unfortunately doesn't happen. And I've had that. And also, in this case, if George didn't have a son, he does mention distant family members, and that can become quite an expensive, you know, genealogy examination to work out who is the beneficiary, and if other people have predeceased that beneficiary, then it goes to their children, and it can get quite complex, and a lot of money is spent on legal fees when arguably it needn't have been if they'd just gone and got themselves a will. So that's why it's important.
I can imagine, though, as well, when we have spoken about these disagreements within families, when a will has been made, and challenging of the will as well, I'm sure is something that does still happen.
Yeah, no, even if you have a will, you can't stop someone challenging, but at least in particular with personal effects. So when we have clients gifting, and especially if they have maybe quite, well, a couple of children, maybe 4 children, 2 of which are girls, because it tends to be, I'm not picking on women, but generally it's jewellery. So if, for instance, there are a number of rings, then we do get clients to photograph them, to label them, so they are clearly identified in a letter of wishes or just a document accompanying the will, what ring is going to who. Because people's descriptions of rings, again, and this is why it's important, as Rachel was saying,
Exactly.
valued before you die, because your description of a ring might not actually be the correct description, and then we get a dispute. So that's why it's so important just to get things in order, because all that we're all trying to do here is actually save people money, because by getting your affairs in order and getting things properly logged, getting things properly insured, that's a huge, the amount of people that don't have the correct insurance for their items, you know, we're all potentially guilty of it. So, you know, it's so, so important just to know what you have so that you don't cause upset with your family, and just to make everyone's lives better. And actually it is, losing someone is horrific, and if you can try to get things in order for your family to stop unnecessary arguments happening, that's worth more than anything, absolutely anything. It's priceless, to be honest with you.
It's interesting you say that about valuations, and we do see it on a regular basis, I'm afraid to say. Natalie, we talk at, you know, spoken at length a little bit about the complexities of things. Now, how long does probate take to be granted usually?
Well, at the moment, that's quite an open question. So we have delays at the moment due to current affairs. Probate is taking a bit longer now than it used to, purely because there's been changes in the court system and so on. But generally, it will probably take you a couple of months to get everything valued, because you've got to give yourself a little personal time to come to grips with losing them and being able to go through their personal effects. And the banks tend to take like 3 to 4 weeks to give you valuations sometimes. So, because at the moment people obviously can't attend branch. So it will probably take 2 to 6 months to get the valuation. But obviously if it's a contested estate, it can take a lot longer, because you can stop probate being granted.
Okay. Phil, we're coming towards the end of this webinar and the end of the probate kind of process. What happens if you have a property and it doesn't sell? What's the situation then, and how does it come through this? And equally, I could ask the same question to Rachel.
Yeah, well, thankfully, it doesn't happen too often. But no, of course it can happen. Essentially, we've got to look at the reasons why. Was the reserve price too high? Is there, I don't know, a legal issue that nobody was aware of? You've got to try and get to the root of it. Ultimately, 9 times out of 10, if a property doesn't sell at auction, somebody will still come and buy it in 1 or 2 or 3 days afterwards. They'd still sign an auction contract, pay their 10%, so they would exchange contracts there and then. If worse comes to worse, we'll investigate the reasons why it didn't go. Have a good chat with the client again, and probably put it into the, the next auction. Should it need to? So
I suppose people's circumstances change in terms of property buying as they do with chattels buying, and there could be literally the next sale could be more appealing to certain people in different circumstances.
It's maybe a little dip in the market at that time, or I'm sort of coin an example. 9/11. We were in a buoyant market overnight. The market went. So if you had an auction, for argument's sake, the week later, the confidence was gone within a week. And that stuff you can't legislate for. So things like that can happen. Market conditions will change, as we've seen over the last year. We had Brexit, we then had the Boris bounce, and then we got the virus. So that's sort of up. It's things do change. So yes, you're quite right. You can then plan for the next auction if something's happened in between in the marketplace, and adjust accordingly. So,
Rachel, I'm assuming in the way that chattels are sold, it's a similar scenario, but I imagine one of the main reasons for going with an independent valuer is putting them into the right auction at the right place in the first point.
And again, you may hold on to items because, if a person dies in, let's say, November, and the good jewellery sales are going to take place prior to Christmas, or then the next one isn't going to be until sort of later on in the year, you'd hold items. So again, you'd be looking at what is it that you're selling, where's the best place to sell it, and when is the best time to sell it. So again, there are different degrees of good times and bad times within auctions, and when the sales are taking place. But also, one thing I did want to just say, Alastair, is that when we're doing valuations, we charge purely on a time basis. And this is really quite important in our area of valuing, that we don't charge on a percentage value. And that's what you don't want to see when certainly valuers for chattels are doing valuations. It should be charged on a time basis, because otherwise you get you don't want the idea that the goods are going to be overvalued, because again, that's not good for Natalie if she's trying to make sure the client is paying the least amount of inheritance tax. So
I imagine it's a case of trying to find the true valuation, really, which is not dictated by percentages of charges.
Correct.
Which, thankfully has almost been outlawed. But brilliant. Well, ladies and gentlemen, I think we're running out of time on this one. So thank you ever so much to Philip, to Rachel and to Natalie for joining me. And thank you very much to Mackrell's for hosting today. I hope you've all found this informative and good fun to a certain degree. And we all hope you're keeping very well at home. And we'll speak to you soon. Many thanks for your time, ladies and gentlemen.
Take care. Thank you.
Bye.
Bye.